a lot of people don't know that their investments could be paying them every month. Now, not every investment is going to pay you in a form of income, but a lot can. And so some people are missing out on good investment opportunities because they are not taking advantage and diversifying their portfolio. So we can get adequate income distributed to us as a piece of our portfolio and have our monthly income begin to continuously increase. So we're going to cover that. We're going to go over some dividends, some of the highest paying dividend stocks right now that are pretty trustworthy as well. We're going to break them down, get on here, look at the annual dividend yields, the payout ratios, the frequency of payouts, and all that good stuff. All right. If you're new to the channel, my name is James Strong. I make videos about trading the futures market, investing in the stock market, and personal finances. We trade to grow our capital. We invest to build wealth over the long term and have asset appreciation. And none of that's possible without having good personal finances. So always remember, we don't trade or invest. We trade and invest. Let me go ahead and share my screen. Let's jump on. So we're going to go over 5 of the highest paying monthly dividend stocks out right now. And so a dividend stock, if you don't know what a dividend stock is, to keep it, in layman terms and as simple as possible, we basically are buying stocks. And these stocks, instead of being like some companies where we're just holding them and looking for them to appreciate in value and then sell them, dividends allow you to not only have the stock itself. Now, some dividend stocks we hold for the sake of asset appreciation as well as income. But on average, the point of having dividends is basically to secure our money, have a hedge against inflation, and create income. So we can put our money here and know it's going to work for us, and it can be consistent. And as well, we can have that asset appreciation and grow it over time instead of sitting it in the bank and it depleting and them using our money. So y'all know I'm an avid person. I always preach a part of our portfolio needs to be, sitting for cash. But even then, we want to have a high yield savings account. I think I have one listed in my description. If I don't, I will get one for you guys. But get a high yield savings account and have your money working. And then obviously the majority of our portfolio is going to work. We need to have these things in investments. So these are one of the biggest investments. We're going to go ahead and cover these, right? So I'm going to go over the top 5 out right now. Again, this does not mean the highest paying. It does not mean this. This is the top 5 as far as legitimacy and things like that. So take these 5, do your research, right? These are 5 of the highest paying, not the highest paying, 5 of the highest paying. So first and foremost, and also these are not in order. This does not mean 1 through 5 is it. No, take these, do your own research, do your own due diligence, and look to see if it's a good stock for you to put your money in and buy, and if it makes sense for you. All right. So want to get all these disclosures out. Some people are like, oh, this is the top 5 hottest stock. Hey, look, man. Everything I do is I provide resources to you. You know what I'm saying? So that's all I'm looking to do here is provide more resources. You guys make the educated decision, and let's make this money. So first we have Apple Hospitality REIT, right? So this is their real estate investment trust for Apple Hospitality. Apple Hospitality owns a lot of hotels that are up under Marriott, Hilton, and the Hyatt brands. So that's the industry they're in. So we got a little overview about them. They formed in 2007. They're a Virginia corporation. Obviously we know they're a REIT. Yeah, so their primary sector is lodging, and then again, their industry is hotels, motels, right? So they're in that industry. So let's go back to their dividends. And so they're paying on average, right? They're paying right now an annual dividend of 96 cents per stock. So they pay monthly. So this breaks out to 8 cents a month per stock you hold. And then you can see all their other stats right here, the dividend growth, all that good stuff, right? So, but their annual dividend is about 96 cents. Next company we want to look at, so let's look at Realty Income Corporation. Now, Realty is kind of known as the monthly dividend company, right? They're kind of like the OGs in the game because they've been paying dividends out for, I think over 50 years or something like that. And you can see right here that their income has the dividends. There's been growth for 19 years. You know what I'm saying? So even right here, even their dividends are growing. So that means it's a good one to go in if you want growth for your dividends, right? If that's a part of what you're looking for your portfolio, make sure you're looking at that. And their annual dividend is $3.12 a stock share. So It's a good one to look into. I mean, you can see where they're at. You can do your due diligence, look to see where they're at for the year to date, the quarter. If you're looking more long-term perspective, looking to hold it just to get this income, look at their 5 year. Go look and do your due diligence. But this is a good company as well. Let's read a little bit about them so you can see. So again, the monthly dividend company, they're on the S&P 500, and that's a thing too, right? A lot of these companies are in the top 500 with the S&P or the top 100 with Nasdaq. So some of them are maybe in Dow Jones as well if it's top 30, but a lot of those are tech companies. So this is one of the OGs. Like I said, it's a dividend aristocrat, meaning they're a tried and true company. They've been paying out dividends for like over 25 years, I believe Aristocrat is. So it's a solid company if you want to know, like, you have your money's pretty much coming on time every month. You know what I'm saying? You don't have to worry about them popping up overnight and going away anywhere. That's not going to happen. Next company, we have AGNC Investment Corp. All right. So this company pays out a very high dividend yield. As you can see, this 14.83%. Don't let that make you buy a ton of stock or detour you from buying. Again, do your proper research and do your proper due diligence. But we can see here that annual dividend is about $1.44 a stock share. And they pay out monthly as well. So they give, a modest dividend. And I always recommend that people turn on the drip program. Just let the money, let that cash amount. Like, I like dividend stocks too. So there's two types of stocks too. We can have cash stocks and we can have stock dividends, right? So cash dividends, stock dividends. A lot of times too, I like cash dividends for some of my portfolio, and I also like to have stock dividends as well, because stock dividends are going to just roll in there and then it's going to really basically snowball that thing. You know what I'm saying? So by the time you might come in, you're buying 50 to 100 shares a year. And in that year, you might have 112 shares. You know what I mean? Because they're paying, if they're giving you extra stock monthly, like, you just accumulating. So by the time you get out 5-10 years, again, this is our long-term investing. Instead of, we might have bought 1,000 shares, we might have 1,300, 1,200 shares. Like, that's just free money. You know what I mean? So people love trying to say things like sports betting is free money. No, this is some free damn money. Get you that real legitimate money. Get the money where these hedge fund investors at, these billionaires are at. That's where I'm putting my money at. I'm not putting on the NBA team. I'll watch it for entertainment. I'm not putting my money behind them. So let's go get our money right here. All right. But yeah, man, good company, man. 144. Check them out again. Do your due diligence. See what they're about. You can always go to the overview page. You can go to Stock Analyst, read about some of these stocks. But they provide private capital to housing. They're backed by government. I think it's on here somewhere. Yeah, government sponsored enterprises for the U.S. government agency. So, look into them, man. It's a solid company. They have not really, and we can see right here, right? Year to date hasn't really changed. So this is one of those companies that you're not going to see much fluctuation, but they're going to be around, right? Now that's 1 year is solid. So 5 year, what happened? Was it the COVID stuff? Was it whatever, right? So just look at all that stuff. But the point is, right, look to see if it makes sense for you for your dividends. Again, do your research, do your due diligence, making sure you're looking through these companies through and through. There are plenty of options. So never think that you have to have FOMO when it comes to these companies. Next, we have Main Street Capital Corporation. So Main Street. All right. Main Street is a good company. They're paying a very good dividend per stock, right? So first and foremost, Main Street invests in small and mid-sized businesses, right? So they're offering, good income potential, good growth potential, as far as their stock as well. The income potential is really good. So it's $4.20 a stock, right? You just saw the rest, man. If we go back to Apple, 96 cents for the year. Let's go back to Realty. 312 was solid too. Again, OG in the space. They're Aristocrat, and then 144. Main Street is giving 412, and their dividend yield is only 7.6. So this is a really good company. Always check the growth, check the track record of how long they've been paying out dividends. Check all that stuff when you look at your, you're looking at who to buy some stock from. So you can come here, you can go to the Nasdaq. You can check the cash amounts and see, are they increasing? So you can see here, right, from 2023, they've actually been going up. So this literally means, right, when you buy a stock for a price, it's showing it's been growing up. They've had some growth over the last few years. So stock is stock. That price is going to cost you one time, whatever it costs. But then you're making money literally, as long as they're paying out dividends. So every company, every stock has its pros and cons, and this is how we start to craft our portfolio to fit our needs. You know, we don't want them all doing the same thing because it's similar when you're trading. If every asset moves the exact same, when it pulls back and loses, it's going to lose big. So same thing here. We don't want everyone being an aristocrat. You know, we might want some that's a little bit more aggressive. We might want some that are a little bit, you know, they pay out a little bit more. We might want some that has a higher dividend yield, some that has a higher dividend growth percentage. Like, we want to spread these things out so we can have an overall well-rounded portfolio in our dividend sector of our portfolio. This is not our stocks to buy for just asset appreciation. This is our dividend sector. So we may not care about growth. So think about that too, right? You know, or this could be a portion of our dividend part that, you know what, I want half for growth and dividends. I want half for just dividends, because all of them are not going to go up. You know what I mean? So that's for you to do. Do your due diligence, talk to your, you know, your team, your financial people, your wife, whoever on your team, yourself, hey, whoever, right? And then the last one we're going to cover in this video is EPR Properties. So EPR Properties, they have a unique portfolio. They have theaters, amusement parks, and golf and entertainment. They give a good annual dividend as well. So right now, currently at the time of this video, it's $3.39 of annual dividend. Their dividend yield is 7.52%. They pay you monthly. So that's a check every month. You know what I'm saying? That's a check every month. And you can now get that other stream of income. Don't ever let these numbers fool you thinking it's only $3.39. One, that's per stock share. And then this thing is a snowball effect. Trust and believe, right? Also, their dividends on average are growing. So they have 2 years of constant growth with their dividends. You can see they're going up a little bit. This stuff makes a big difference now. And you can see before 2020, it was almost 40 cents. So they're going back in a trajectory. Now, you know what happened, man. Amusement parks, theaters, a lot of things took a few hits. So, again, do your due diligence. Could be a good opportunity. Make sure you do your fundamental analysis and you're looking at these companies and looking at the back end, reading the reports, reading the shareholder minutes and all these things, and see like what's going on with the company. Do they have new leadership? Like, see what's going on before you put your hard-earned money there. But again, these are 5 of some of the highest paying dividends. Check them out, man. Get your portfolio right. As always, we need money to put in our stock portfolio. This money ain't coming out there. You can use a job income, but you want to have additional income. So that's why I always, like I said in the beginning of the video, learn to trade and grow your capital. So if you want to learn more, make sure you go to my description. I have all my resources down below. If you like making money, make sure you subscribe to the channel. If you don't like making money, then don't subscribe. It's that simple. And as always, man, until next time, let's keep getting this money. Much love.